Hello, fellow traders. Tis I, the Rumpled One, coming to you on Monday, December the 18th. The year's 2023. Let's talk trading. The right tool for the job with Walmal. These videos are for educational purposes only. Your results may differ from mine and different from Walmal. Walmal, we were just talking about the right tool for the job, and I was mentioning how, most of my systems are designed to get, a couple of pips real quick as opposed to sitting in the trade for, hours or days. And how you really have to decide, what the job is and then go get the right tool for it.
Yeah, with what you've proposed here, that I guess that you would define job to be basically your method or strategy for entering the market and exiting the market. And you're exactly right. Depending on what you're trying to achieve, if you have to go and make a decision what type of trader you're going to be, and based on what type of trader you're going to be, that's going to go in, or it's going to, or at least it should determine what the proper tool is that you're going to go and use to do that. So, for instance, if you're working a 9 to 5 job and it's in the middle of the, your job happens to line up and right in the middle of the London session, well, guess what? You're not trading the London session. At least you shouldn't be, because your job at times are going to go and demand that you can't have your eyes on the screen, because your job is going to be has to be priority number one, and so you can't do that. So what does that mean? That means you may have to change your, when you go and do your trading strategy. Maybe you would get off work, and you're able to go and trade during the latter part of the New York session or the Asian session, depending on where you're at. So that's part of the consideration. Or the other thing that you can do is that the reality is that you can go and say, you know what, I'm not going to go and choose a methodology that's going to go and tie me to my desk to go and watch it, as you like to say, watch the market tick by tick, and maybe you have a strategy out there where you look at it and you drill down on your charts and you say, okay, I'm looking at the monthly chart, I'm looking at the weekly and the daily, and by looking at those charts and drilling down, I can take a strategy and build a strategy around, looking to go and place a trade, sometime in the evening, and coming back the next evening and seeing if, made money or lost money, putting in your TPs, putting in your stop losses, and just executing the trade and just seeing how it works out. Nothing wrong with that. Lots of people make lots of money that way. And that's just another strategy. So that's a tool that you can have in your toolbox, depending on what your ability is to be able to go and trade. Or if you're like me, where I'm sitting in front of the computer, sometimes it feels like 24/7. It's not, but believe me, I'm only in front of the computer for maybe 4 hours a day, 3 to 4 hours a day. But it seems like 24/7. But I'm watching the market like a hawk, and taking my trades when I can take them, and getting out when I need to get out, whether it be for a win or whether it be for a loss. That's another tool that you can use, based on the type of job that you're trying to accomplish. And so you have to make those decisions. And and part of it is, making that decision. We'll talk about this for a second, but how do you make that decision? Well, as I've already alluded to, part of the decision is made by what is your physical ability or your physical availability at this moment in time to trade. If you can't trade, constantly be sitting at your computer for 2-3 hours and not take your eyes off the computer, well, you can't do what I do. It's just, well, maybe you can, but you're taking a bigger risk. Let's just put it that way. And and that's just part of it. And you just have to make a decision. Or if you're in a situation now where you're able to go and do that, well, then you can start. You have more possibilities. You can do what I first alluded to. In other words, drilling down on everything and taking long-term types of looks at the market, as well as being able to go and do short-term type trading. And so that's my idea about what is the right tool. Well, the second part of it is, what's your personality? if you're an over anxious person that gets excited very, very easily and, and is very, very impulsive, I wouldn't suggest, being a trader that goes and tries to go and jump into trades very, very quickly and, and jump out of trades very quickly based on what's happening in front of you. Because unfortunately, what's going to happen. And you're going to go into jump into things that you think are going to happen as opposed to what your screen is actually telling you. And then you get yourself into trouble. And I can tell you that is my personality. And it took me a long time to be able to control that impulse within myself. It took me years to get over that hump of just immediately jumping into a trade and jumping out of a trade when I shouldn't have. So I jumped in too early, jumped out too late, or jumped out too early. And it just became a real problem for me. And I had to go and fight myself and fight against what I do naturally, and which is jumping too quickly. But at the same time, you can go, if you put lots of rules in place and decide that, hey, I'm going to be disciplined about this and I'm going to be very, very careful about this, you can go and develop not only a strategy, but rules that keep you within your strategy. So that's my two takes on it, sir.
Well, I think I have to agree with you. There's there's so many methods out there, and every time you turn around, somebody's posting a new method, and it's, you have to be careful of shiny object syndrome, and you have to just kind of wonder, why is it you're maybe looking for a new method when maybe the method that you've picked will do the job you want to do, but it gets back to our to change what needs to change. But as far as selecting methods, mine are for short terms because I'm usually measuring price movement, over a minute or the next candle, and I'm usually looking at 1 and 5 minute candles, not so much the higher time frame candles, because I've got M30 on the chart right now, and I'm usually saying, okay, let's not trade against the M30. Why? Because statistically, it will cover the previous M30. So if it's heading that direction, I don't want to trade against it. I don't. And when you look at the high minus open and open minus low, you can see if you're on the right side of the open when it's moving that direction, you can get a couple of pips. Sometimes you can get even more than a couple of pips. So it's just one of those things that, you just pay attention to what's on the chart. You stick with your method, and remember, it's not trade by trade, but it's, what does this method do for you over 100 trades? Because a lot of times people will give up way too soon.
Right. You're exactly right. I mean, a perfect example of that is today I've had a pretty hard day. I think I've admitted that to you already, Tiro. I mean, I've made my core, but the reality is I had to go and take 11 trades today to make my core, which is, for me, that's pretty bad. Normally it takes, somewhere around 6 trades or so to make my core. And my efficiency right now is sitting at 77%. Well, some people say, well, that's great efficiency. But with my method, it's actually not. I need my efficiency to be closer to 80%, And so to get to my core, because I'm only trading at 77%, I had to take more trades to get there. And if I was like, as a little kid used to say when I was growing up, is if you were a giver-upper, what would have happened was that there was a point today where my efficiency was somewhere in 25-30% range. And I just had to say, the method works. I'm not working right now. It's not working for me right now. I'm not winning right now. But the method works. But I'm okay. The reason why I'm okay is because I haven't exceeded what I'm willing to lose for the day. So I'll just keep on going. And I'll keep on going until either I get myself out of the mess and no longer are underwater, and I can go and say, hey, I made core, I'm going to be good, I'm good, or I get to the point where, you know what, it's a losing day. And here's the reality. I know with my method and what I do that over the long haul, I'm going to have maybe 5, 10 losing days a year. That's just part of the deal. That's you got to lose. It's sort of like you go and play baseball, right? The reality is nobody wins 100% of the games. Nobody wins every single game. You play 163 games. You don't win 163 games. You're an incredibly fantastic team if you happen to win 110 games, which almost never happens. That means that you lost 55 times or 53 times. And that's just part of the game again. And we just have to go and recognize that because it's part of the game. We just keep going. We don't give up. We trade what we see. We make sure that we're trading the method correctly. We don't change the method. What we may do is change how we're doing it, meaning, and we very, very big caveat here, meaning, hey, what am I doing wrong? Go back and look at your trades. Did I execute this trade correctly? Did I get in too early? Did I get in too late? Did I go and actually trade something that really wasn't there? Oh, what about all these trades over here? Why didn't I take those trades? What was the failure there? You can look back at the chart and say, hey, look at that. If I would have taken this trade, would have taken this trade, would have taken this, they all would have been winners. Why didn't I take them? There may be legitimate reasons why you didn't take them. For instance, for me, once I win a trade or lose a trade, I step back for a moment, and what I do is I just try to go and recoup a little bit, get my head back on my shoulders. I don't want to jump into trade after trade after trade, and so that's just part of my methodology. Somebody else may have to go and say, that's just not who I am. Because once I get into the swing of things, and I just keep on getting into the batter's box. I keep on getting in there, and I keep on swinging, at the trades until I'm in profit. That again, that comes down to you, your personality, and how you trade, and you have to figure that out. I can't figure it out. Hero can't figure it out. That's all comes down to who you are as a person, and that's why I slam this home, so often. I haven't done it in a while. I did it last week, I think, once, but I used to do it almost every time I was on, one of these videos, and that is that, if you don't know you sell, you can't trade. And I'm such an adamant believer in that. You have to know all your personality traits. You need to know what you're going to do under pressure. And the problem is sometimes what you think you're going to do under pressure is not what you actually do under pressure. And there's only one way to find that out, and that is to go and take the trades and see what you do under pressure. And that's why, I know, Hiro, you're very, very stringent on the idea that, when you're learning how to trade, you got to have some type of, coinage in the game, meaning you need to go and actually take the risk of actually losing some money, because you don't know what you're going to do. Now, that doesn't mean that if you're learning the platform that you go and take trades with real money. If you're still trying to figure out MT4, how to buy, how to sell, how to calculate, lot sizes, how to do all that stuff. No, you don't need to do that with real money. But once you've got that all down, you've got a strategy in place, and now you want to go and actually start executing, your trades. Well, that's fine. You can even do that without money. But once you get to the point where you now know how to execute all those different things, now you need to start putting money in the game, because you got to deal with the next part, and that's the part that's hard.
Yeah, that's the part that's all you, because I've had the buy zone up the whole time. It's real simple. You can trade the daily/weekly open since this is the first day of the week. You can trade the buy zone trades, which after if price moves a certain distance from the open, it'll usually move a little bit more. And I probably need to actually rerun the frequency distribution on the pound. I would imagine I need to tighten those up from 8 and 10. So, fellow traders, we'll probably talk about this a few more times because it really is important. is selecting the right tool for the job. So this is TheRumpledOne, over and out.